Hello, hello everyone. This is Akal from Global Stocks, and let's begin from where we had left off. We had plotted a 200-week moving average on the chart, 200 tick, not week, 200 tick moving average, and we had also plotted a Guppy multiple moving average indicator. Now we need to plot two, three more indicators. Maximum in this basic plan, essential plan, it is called by TradingView is five indicators. So the next indicator that we will plot is called a Bollinger Band. It's called Bollinger Band, and we will plot this, and they come like this. Uh, there's a bit of cosmetic stuff we will. I'm not doing here. I've got it done in my own layout. We'll go to my layout after I'm finished plotting this layout. Then we plot one more indicator. It's called RSI. I'll explain all these indicators to you later. This is called an RSI indicator, and the last indicator that we need to plot is a percent price oscillator or a price oscillator. It's called. Basically, it's an MACD indicator, just that instead of a absolute difference in prices between the 12 and 26 moving averages, here we have a percentage difference between them. And so we save our workshop, sorry, layout. We save our layout. Okay. And this was for Apple. And now there will be a slight cosmetic difference. We'll go to my layout. This I have named it Guppy Ball Polygon 200 tick, this thing and this thing. And it is opening default on gold monthlies. So I'm going on dailies for Apple. I have marked these vertical lines and horizontal line because there was something I wanted to discuss. I go to Google. There's a vertical line. I'll discuss something in the coming time, uh, so in a few minutes from now. So here you will be seeing only the. Here are the other two indicators, RSI and PPO. So we have a total of five indicators. First is the 200-day moving average. Here we see it, this line, black line, going up like this wavy line. Then the next indicator we have is the guppy, reds and blues. And then we have this Bollinger Band, and then we have these two. So a total of five. 200 day moving, 200 tick, not day. 200 tick. Why I'm saying tick is because uh, it will come in all periodicities. Okay, there are periodicities also. By periodicities, I mean you can see a chart in any of these things. We had already seen yearly chart also in Metastock. So this is daily, weekly, monthly. You can make it a 3 month chart. This is a 3 month chart. It's alphabet Google. So it's like a quarterly chart. You can see a quarterly chart. You can see a monthly chart. This is monthly chart of Google. You can also see a yearly chart, but I'm not making it that 6 monthly chart or whatever. However, periodicity. Intraday periodicities are these. You can see a 5 minute chart. This light blue color is the aftermarket trading in Google. You can see these periodicities also 1 minute, 2 minute, 3 minutes, but I'll just focus on 5 minute, and then you can see 15 minute. So 15 minute charts looks like this. 15 minute means or what a daily chart means is that each of these candlesticks represents one day's trading action. This one, which was a very big day when Trump announced exemption on Wednesday 9 April 2025, Uh, this it shows here in this corner here it will be showing 9 point something, 9.68 in this corner. So it says it opens at one. Here you see the open 144.42. On the right of it is H 159.55. That's the high of the day. Low of the day is slightly below open, that is 143.91, and it closed at almost near the high at 158.71, and it gained for the day 9.68%. So this was Google on that day. On that day, if you see what Nasdaq did also had this white candle, large white candle, and it did a gain of 12.02%. If you see in this bracket comes the gain. So 12.02%. SPIX on that day, this is the SPIX chart. SPIX on that day showed a gain of 9.5%. These black lines are a negative day. So on that day it opened higher. It This O shows the open for the day. That day price opened at this, went up high this much. And you need to stick to a candle to read all these numbers for the candle. You cannot move like this and this because then the numbers change for the candles. So this dashed black line, vertical line, shows I'm sticking to Tuesday 8th April 25, and open on that day was 5193.57, high was 5267, low was 4910, and closed near the low at 4983 approximately. And you lost and we lost 1.57 in the S&P on that day, 1.57%. So this is how a layout is formed, or a template is formed in Metastock, and TradingView calls it layout. The next stuff that we have to discuss, we go to Amazon. I'll apply a template, basic clean candle log I call it. It's a basic template and it's clean and it's has candle and it's on a log scale. So as Amazon's graph we have since about June 1997, and that goes like this. And let's make it a monthly graph so that less number of ticks we have to see. This is a monthly graph, and this is a log scale. Normally, most of the people, the mistake they do is they see it on a arithmetic scale. And arithmetic scale skews the chart like this. For so many years, from 97 till 215, it was showing that Amazon has done nothing, very little price movement, and suddenly it has skyrocketed up after 2015. That's not true, because for let's say a chart goes from 1 to 100, so our wealth has increased 100 times on the chart. So what is the midpoint? When do you say that what this is the midpoint of my wealth increase? Is it 50 or is it some number else? For example, if you say it is 50, then between 1 to 50 your wealth has increased 50 times, and between 50 to 100 your wealth has increased only 2 times. Whereas on the chart, the 1 to 50 and 50 to 100 is occupying the same, for example, space. For example, here let us say this is 100. Here we see this is 100, and we see that this is 200. So this is this much. Whatever, howsoever you want to measure it, you can measure it using a ruler. It's about 5 centimeters, and a similar distance downwards would mean 8.67, it says. It says on this line 8.67, let's say 9. So 9 to 100 is about 9, or you can even say approximately 10. So 10 to 100 is 10 times. My wealth is increased 10 times in 5 centimeters vertical y axis 5 centimeters, and here in the next 5 centimeters it is only increasing uh, 2 times, 100 to 200, which is not correct. Not the way you should look at a chart. You should look at a chart at constant wealth. So constant wealth percentage increase. So you look at a chart on a semi-log scale or a log scale. So you say apply. So your mm, this it is very close to 10 now, 8.67 or 8, and this move looks like 10 to 10 is much larger than 10 to 200. This is about 5 times this move, which it should be, because 10 to 100 is 10 times, and 100 to 200 is about 5, is about just a double or one fifth of the 10 to 100. So we always look at a chart in log scale. So that was a bit about scaling and log scaling. Uh, I, wa- I can show it. I would like to show it to you. Apple. Let's see how Apple looks. And monthly basic clean candle log. This is how Apple looks, and ever since 1982. And this is a log scale. And if I make it an arithmetic scale, not a log scale, a default and arithmetic scale. So this is how Apple looks. Here also it shows Apple has it hides all the data between 1982 to 2012, because it's very small, minute moves on the arithmetic scale. Whereas on a log scale, this looks like this. We see so much of information in the up till 2012. Apple has done a lot of up and down movement. So we see a chart in log scale. Next, we have already discussed. Next, we have already discussed this hourly. Sorry, 5 minutes, 15 minutes. We can see it a 30-minute chart of Apple. Mm, this light blue color is aftermarket, and this off-white color is pre-market trading. This white color is regular oil. So this is a 30-minute chart. Here it means each tick is a 30-minute candle. Each candle is a 30-minute candle. This candle is a almost a bull candle. It's white, opens at its low and closes up high. This is I'm not getting into candlestick analysis, but this is a candle which has very little wick upper shadow. This has got this candle has got very large lower shadow and very large upper shadow. It's called a high wave candle. So similarly, you can see it on a hourly chart. So this is hourly chart. The layout remains the same, or the template remains the same. Only the periodicity is what we call it changes from whatever you want to be. You can make see a two hourly chart. They they look similar. You can see a 3 hourly chart, and this similarity of looking similar between your let's switch to Tesla. I've not put many lines there. So, and this similarity is called a fractal nature of the market. Fractal, you could search on internet or Google the images for fractal. They are basically the same patterns again and again on a lower time scale and on a higher time scale. So, this is called a fractal nature of the market. Now, we've already seen daily, weekly, monthly charts, yearly charts, 5 minute, 15-minute, hourly charts. We've also done a layout. Now, let us see some examples. Uh, okay, I'll just explain briefly. Let's go to a weekly chart. These blue lines which you see here, I'm now explaining the uh, Guppy multiple moving average. These blue lines which you see here are moving averages. You'll have to figure out what moving averages are yourself. They're just the first moving average is a three period moving average. It means three of the recent most price closes are used to calculate the 3 period moving average. Calculate as an average. That's why it's called a moving average. It's an exponential moving average. I'm not getting into what that is. And similarly, the next line is a 5 period moving average exponential, then 8, then 10, then 12, and then 15. So these form the uh, moving averages, blue moving averages. Similarly, we have this red moving averages. They are the 30, 35, 40, 45, 50, and the 60 period moving average. Uh, and they mean stuff. Um, what they mean various things at various points. For example, if you observe these blues, I'll show it to you on Spix. See the behavior here. These reds are going up in a strong, this is called an uptrend, strong uptrend. The blues are above them, they're also indicating an uptrend. They're well spread out, they show strength, and they show that there is a lot of momentum in the market. This is Spix, and this time is around 2017 to 2018. Then there was a fall here. How we can expect a fall is when the blues are getting expanding way upwards, and we also, I'm going to discuss this in a minute, or I'm discussing it as we go along. This is the RSI. When RSI goes above this line of 70, is plotted between 0 and 100, and when it goes above 70, it's called an overbought region. It's overbought. This light green color here signifies that Spix in its weeklies has become overbought. So you need to be careful. It can get sold here. Too much buying has happened in it. So that's what happened. It got sold here, but then it adjusted itself again, and we again it went up uh, in a good trend. After this, it fell again, and notice how the averages change. And then it had a sharp recovery, and this bounce came off the 200-week moving average. So 200-week moving average also serves as a support, and then it went up again. The reds were very supportive and strength. Blues were bouncing off the reds, and the selling was getting absorbed in the reds. The reds indicate investors, long-term investors, and the blues indicate trader behavior, shorter-term investors or traders. This was the COVID fall. That's how it looked. And again, we had a very sharp recovery, and market stabilized after a while after the Fed cut and all. So it went up for a while, and then it had a problem in effectively January 2012 or January 2022, sorry, not 12. And then the reds crossed over like this. So here we see the behavior of the reds and blues. Uh, what this guppy indicator tells you is as long as the reds and blues are well separated and blues are above the reds, we have a good trend. But when the blues cross over between themselves, so here the blues have crossed over on this black candle. The shorter term blues have gone below and the longer 15 period blue is above now. It's inverted. And then the next thing what the blues have done is they've crossed through the reds also. They bounced up a little bit here on this white candle, but then again they couldn't sustain the move up and then they fell down and they crossed through the reds. Next thing what we see is they took support on the 200-week moving average. 200-week moving average from above gives support, is expected to give support. It didn't give support here much. Although you can say it did also because it pulled the prices back up again. But here another thing happened, the reds also crossed over. So the entire 2022 was turning out to be a bear year. So reds also crossed over. And they didn't form a sustainable downtrend like this sustainable uptrend, but they went sideways sort of thing. And up till July 2023 or slightly earlier here, May 2023, we can the reds crossed over again here in May 2023. So again they formed a uptrend here. And this happens in all time scales, not only in weeklies. You can see the similar thing in, I'll show you just a minute or just a moment from now, in other time scale. And this is the present situation of the SPICs. The blues have again crossed over, but the reds have not crossed over. So unless the prices rise for the blues to cross back over the reds, or if the prices go sideways, the reds will cross over, and that makes the situation even more bad. But anyway, what we just saw recently on last Wednesday was that from pretty close to the 200-week moving average, we got a huge white bar, about 9.5% on SPIX and 12% on NDX. So this gives us hope that the market wants to stop falling here. And so this is the Guppy multiple moving average indicator. Let's see how it looks on the monthlies. Monthly it looks even better. Monthlies, this red is the secular bull trend. It's been bullish secularly, except for this period in the 2008 fall. 2008 fall, reds had crossed over here, and they again then took a long time to cross back over in May 11. So the 2008 period was particularly harsh. The averages absorb selling and absorb stuff, but they also are a function of the prices. See how the averages absorb stuff, falling stuff, prices. Between this black line and between this blue line vertical, the prices fell and they got absorbed by the red moving averages. So the if a price comes inside the red moving average, it is likely to get stopped if the time period is high, if the periodicity is high, if it's a monthly periodicity. Okay, now we have discussed uh, the 200 tick or 200 tick. I'm saying because it works for all. For it's a 200 day moving average, 200 week moving average, 200 month moving average, 200 hourly moving average, 15 minute, even a 15-minute chart. It's a 215-minute moving average, etc. The layout is the same, and it's just a tick periodicity moving average. Next, I'll discuss Bollinger Bands, and for that, okay, let me just show you some more stuff on 200-week moving average, how it acts as support. So let's see December 24, 2018. I had made a note of it. Yeah, this fall. So this fall has been supported by the 200. We are seeing a weekly periodicity. So this fall has been supported by the 200-week moving average. And then we have in 2022, again on 13th June, week of 13th June 2022, we see that the moving average again supported the fall. And after that, the prices moved up. Here also we can argue or say that the prices moved up from the region of 200-week moving average, which is not inexact or inaccurate, but it didn't give 100% support, but nevertheless supported. And then recently, here also it didn't touch the 200-week moving average, but from pretty much nearby, we got the white candle. Market turned from there. Let's see another, although we've discussed sufficient. This also acts as a resistance, 200-week moving average. Let's see Apple, and let's see it on its dailies. Recent moves. So on this date between 25 March 2025, Apple was hitting the 200-day moving average from below. So for the next 7 days, 1, 2, 3, 4, 5, 6, 7. For the next 7 days, it was unable to penetrate through a combination of two, three things. Firstly, the 200-day moving average, it was facing resistance. Then it was also facing resistance from the guppy reds. They were also from below. If the reds are below the prices, they are supporting the prices because they are investor behavior. The investors are buying and traders are selling. And here, if the reds are above, then traders are doing what I mean. The traders are buying and selling, and investors are also joining in the selling. So Apple prices are facing a resistance, and that's how we say that 200-week moving average sometimes acts as a resistance also. Then I have not put Netflix here. Let me put Netflix also here. So it's the same way. You press the plus button here. It will show go to stocks. Type Netflix symbol, or you can type the whole name also. Put a plus here, and Netflix comes up. So Netflix to on Jan 2023 on weeklies. So I'll put weeklies here. We see that this is a black line. This is the black wavy line. This is the 200-week moving average. Netflix came from below here all the way up, and it touched this black line, and it fell down before crossing the moving average, and then it went up, and then it found support on the moving average. So moving average acts, if you're coming from below, moving average is expected to give you resistance until you break up upside like here. and then if you're falling from above, it is expected to give you support. So support, basically support changes polarity. If you're coming from or so if you're coming from above, the line will offer you a support, price support or a moving average. They will offer you support, and if you're coming from below, they will offer you resistance. So next, let us discuss support and resistance in some examples. Horizontal price support. Now again, I'm going to put a ticker here. It's the your favorite stock, Palantir, and I have to click on this to go to Palantir, and we'll make it dailies because that's what I want to show you. And the so there are two examples here. So between this point, Jan 3 2024, this black Jan 3 2024, this blue ticker here on the bottom or on this vertical line, and between 1st February 2024, for about a month, prices were pretty much on a similar price level. So that price level of about 15.58 or near that level was giving a horizontal support to the prices. And there was something else also. Where is it gone? Okay, and if we see here between 19th April 2024 and 29th May 2024, again we see that prices were given a horizontal support around the level of 20.39, 20.4 or something like that. So prices were finding this region as support, they were not going down. And after a while, about a month's time, prices went up. If price region is not being broken, that means it's giving good support. So prices generally then tend to move in the other direction. Let's see Apple again between November 24. Yeah. So this here was a support point for the prices on 1st November 24. Prices did not break this level. They rallied from this level. So this became a point of support. So on this date, on 22nd of Jan 2025, prices again came down to that level, but they got support from the same price level. So this price level acted as support, and there was a confluence of the support from the moving average also. So there was a double support acting at that time, the moving average and the price level. So this is support examples of horizontal price support. Let's see some resistance examples. So Apple again on 200-day moving average between March 25. We've discussed this example. So there is a price resistance also. Even the first two three bars show that this price is acting as a resistance, and therefore for 7 days Apple was unable to go up and also had a resistance on the 200 week or 200-day moving average. Let's see Hood, and Hood is another ticker which is not here, so I'll add it. between 16th Jan 2024 and 7th Feb 2024. Yes, so here we see how very nicely Hood had support around this price level 10.51 on the right hand side of the screen, and the black you can see around 10.51, 10.5, 10.5 something. So we had a very horizontal price support, and I was showing resistance. This is support. Anyway, we see a support here. This is a support example again. So, and also a confluence of horizontal price support and 200 week, sorry, 200-day moving average price support. I was expecting a resistance example, but looks like I made a small mistake. Anyway, let's get to trend line examples. So we'll go to SPIX weeklies. Jan 22 to Jan 30. So we'll draw a trend line. Trend line is a line that touches the highs between various prices. So it starts from here. This is the first high. This is the second high. This is the third high. This is the fourth high. And this trend line gets broken here. So the the longer the trend line, this is almost a year long. The longer the trend line is in place, and the more the number of times it has been touched, the more potent or stronger the trend line. So it broke here. This is a weekly chart. Again, the higher the time scale, the more potent the signal. This is a weekly chart. It broke out here, but it fell down there. And this is called typically a pullback to the trend line. This was a pullback. This was slightly overdone again. But when it started climbing and crossed this line here, so that meant that you could get in. Basically, you could get in after this on this day. So it won't last for much in the party, but after a while came a good rally. So this was a trend line break and a move. Let's see a Netflix example. Dailies between August 5, 2024. So let me change the color of the trend line. So this black line, which starts from, this is an upsloping trend line. The one we just saw was a downsloping trend line. When a downsloping trend line breaks, it means the prices will expected to go up. When upsloping trend line means the prices are already going up, and that breaks it. This is again a weekly trend line. It is touched in four places. or three places. So it's pretty important also, 1, 2, and 3. And so it breaks in this time, and prices start falling downwards. And this two time it has tried to make a pullback, and basically the pullback means prices are trying to come up, but generally they fail. So, and also in this case, the for Netflix is a better chart than most of the other charts which have fared in the current meltdown due to after in March and April. And so this is fairly a better chart. Blues have just crossed over and are still bouncing, and reds are also upwards only. Let's see Meta dailies. Meta is another chart, but I have not opened here, so I'll open it here. See the what I was just showing Netflix as compared to Meta. Meta is a much worse shape than Netflix. Netflix is like this. The blues are going horizontal; they're not falling. Meta has crossed over the blues; they've crossed through the reds also. So Meta is in a worse shape than Netflix is. Netflix is fairly pretty decent. Meta also we see an upsloping trend line. This one, let's make it black here again. So we see first touches here, second touches here, third, fourth, four touches on this trend line, and it's an important trend line. And when once it's broken, prices fall down quite rapidly. So these trend lines tell you behavior of uh, what can expect out of prices if the trend lines break. If a downsloping trend line breaks, like I saw showed you in SPIX, then it means the prices are expected to go up. And if a upsloping trend line breaks, then it should mean that prices are expected to go down. Just give me a second. I'm catching a glass of water. Just give me a second. Okay. So the next stuff that we have to discuss is uh, Bollinger Bands. Bollinger Band. Let's see gold. Gold also again. I have not put. So let's put gold here, and we'll go to all. We'll write gold, and we'll go to gold US dollars per ounce and add, and it gets added. So gold. This is a gold chart, and it's a weekly chart, and monthly chart is like this. It closed at 3326.83. I have a slightly different chart. The values are slightly different, but it looks the same. And chalo, I'll first. So gold faced resistance here at this point. It stopped on Monday in the August 20, month of August 20. So it faced a resistance at this price level of, on the right of your screen you will see 2063, around that level. On 22, after 2 years, it again faced resistance at the same price level, similar price level, 2051, 2060. Then in a year later, it faced price, or a year and a half later or something, it faced resistance at the same price level again, 2075. So we can draw a horizontal line there and say that this is a resistance line, and it touched it here once, twice, thrice. It's a monthly chart, so the potency of the move is even more. It's a very, if this resistance line is broken, that means gold will go up very nicely. It got broken here, and with this white candle, and not that white candle did two three things. Firstly, it broke the resistance line. That's the first thing it did. Secondly, it was a big white candle, 9.27%. If you see these moves, these 6.53 is the latest move in monthly. This white candle was 9.27%. If you see what is in this brackets here, on when you put your cursor on this, when you put the vertical dash line on the candle, so it was a big move as compared to, as you can visually see, other moves uh, on between this time period of 24 March 24, August 20. It's about 4 years. In this 4 years, gold was up and down, and not really up the resistance line. Second thing, what gold was doing was it was breaking out of the Bollinger Band, trying to break out of the Bollinger Band. So it didn't break out very much, but how Bollinger Band serves to give us an idea of what's going to come next is when prices reach up to the Bollinger Band and try and cross it or break above it. So that means uh, that prices will go up further. Third thing, what was happening was the reds were in trend for since January 19. Reds were had become in trend, so they were showing that the investors of gold were always buying them in dips. Whenever gold was falling, there was good buying coming. Or gold fell here, the good buying came. It fell again a lot. Reds absorbed the fall. Here again it fell. Reds absorbed the fall. Reds are investors, and blues are smaller investors, smaller term investors or traders or position traders or that kind of thing. So this is basically what happens uh, when a bull brand, I call them bull brand breaks, Bollinger Band breaks, and this is how the RSI looks. It's very high. A high RSI, you click on this, it falls down into place. You click on this expands. A very high RSI, 85.54. Above 70, it's a danger zone. So above 70 is a danger zone. You are being told that your security instrument stock index is very high. It has been bought a lot, so it's time to fall. So I want to show you something else also. What I have is called an RSI off RSI. So I'll open gold. I have a slightly different future contract. The prices are slightly off, but it gives the picture. So it's a similar chart, and you can plot the same vertical line. And this got I plotted two Bollinger Bands. You can do that, but it's okay if you just have one. That's also fine. The thing which I wanted to show you was RSI off RSI. That's an indicator. It's an indicator of an indicator. So this is an RSI, and I have plotted guppy on the RSI also. So when the guppy blues are overextended, are they're called forming a bubble. So like the situation is pretty much similar to what was here in this time. It's pretty much near, and right now it's gone even above this. So after this time, it fell. Uh, after this vertical line, after the vertical line, gold fell. If we see here, basically gold's uptrend finished, and it went sideways for close to 4 years. So right now also it's very high up, such, and this is a monthly chart. It's not a small time chart. It's a monthly chart. So monthly signals are very potent. And next thing what I want to show you is this is an RSI chart. So next what we'll see is a RSI of RSI chart. In this case, the RSI of RSI is showing a divergence. This is called a divergence. We'll be talking of divergences in just a moment. So the this peak coincides with the RSI, and this peak is below. So the RSI is, now we'll talk of RSIs. So in this one I had shown you that this RSI is above this peak, and here we see that the RSI on monthly is below this peak. So it means the RSI has a divergence, and most probably the RSI will fall. And if the RSI falls, then basically the price is also falling, because that is how the RSI will fall. Unless the price falls, the RSI cannot fall. So, or the price goes sideways, then the RSI will fall. So this is what I meant was, this is what the current gold situation is, and this chart is slightly off, but that's okay. It explains how technical analysis works, and uh, here we don't have indicator of indicator in my plan. If I buy a higher plan, then maybe I can plot more indicators, but I've got it there, so that's fine. Let's see another example. Let's see another example. Let's see Bitcoin. Crypto, go to crypto, it gives you Bitcoin USD, Bitcoin US dollar, add add that, and you see Bitcoin USD. Uh, it's Bitcoin we have to see in weeklies. This is the PPO, and we'll be talking of PPOs in a while. This was RSI. Here again we see that when RSI goes above 70, when RSI becomes overbought and becomes dangerous to stay in it, it went above 70 here, and after that it kind of went sideways. So let's see the Bollinger Band example on Bitcoin. It says I've got it written is Monday 23 October 2023. Yeah. So this is how a white candle is breaking the Bollinger Band. The reds are also crossing over. The blues have already crossed over, and we have a trend in place. So this price from here went from about 34216 to close to 74,000 USD. 34,000 to 7. That's a fair amount of rise between this level 35,000, you can say. And this level, approximately 70,000. It's almost doubling, 35 to 70. So it doesn't tell you that it's going to double. This you don't know. The only thing it tells you is to get in and manage your trade with. Uh, so how do you know when to get out? Let's see if we get in here. So first signal that came was here that you should exit was the first signal in this PPO cut. PPO when it cuts downwards, that means you should exit. It didn't cut, it bounced back, so that's why the and then cut bounce back. That's why in the weeklies with a good candle, so you can if you had preemptively exited, you could have gotten after again 2 3 days, but then you got a good signal to exit when the PPO cut happened here. PPO cut means you exit when the green line cuts the orange line. These colors of the lines you can have whatever colors you like. And after that it went sideways for a real long time. Then we have another example of Netflix weeklies. This is very far away, 202 2016. But anyway, we are just educating ourselves, so any example should be fine. It says October 17, 2016. Yeah. So this was the big Bollinger Band candle and it was 25% 0.65. If we see here, when I go to that candle, you will see 25.65%. That's a huge move for a week in a stock. And what happened later was you can see reds spread out, blues went on a trend, the selling got absorbed, and we had a rally from 127.5 to 415. So it doesn't mean you're going to have a 250% rally, but it just means that you're going to have a good rally. So also note that price did fall for 3 weeks, 3 4 weeks after that. So what it generally means is the bottom of this candle will not be broken, and that is also what I had meant when I had put out a note in my group that the bottom of the that was a daily candle, so the potency is lesser than a weekly candle. But anyway, so when I had put that the market has seen an immediate bottom, it seems, but from similar candle behaviors. So this is Netflix weeklies. Let's see another one, Nvidia dailies. This is all Bollinger Band break examples. Nvidia is here. So this is Jan 08 2024. Here is another Bollinger Band break example. This white candle is breaking the Bollinger Band, and therefore it is setting the stage for an uptrend. And prices went from 52 approximate $52 to $93 approximately. That's approximately 80% move. So that's the utility of Bollinger Band. I have purposely uh, spoken more about the usage of indicators rather than the academics of indicators or semantics behind indicators. So how to plot them, what they are, etc., etc. That information you can find anywhere. But this usage is what I felt was more useful to you, and therefore that is it. Let's see some RSI examples now. So we go to SPIX monthlies. November 24 and Jan. So monthlies. I just removed so many vertical lines. So I'll draw. So look at this price here. This was in 1st November 2024. Here you can see what the here you can see what the date is. This is 01 Friday 01 November 2024. So that's how the month was starting. So this price is went up till here you can see what the closing price is. C means close, and this means 6032.39. Here you can see 6040.52. This is slightly higher than 6032, 6040. But look at what the RSI is doing. The RSI is below. Price has moved up, but the RSI peak is making a jagged peak. So because it's 1 month by 1 month, so the RSI is below. This is called a divergence. Divergence means it is diverging from price. Price is making a new peak. Price is higher. It's a new peak than the previous 1 month earlier, 2 months earlier price, and the RSI is falling. It's a lower peak. So this is a divergence of the indicator from the price, and therefore prices are expected to fall. And our indicator fell. That means prices must have fallen. So after this, we have had 3 months of falling. 3 months have passed and prices have fallen. So this is called a divergence, and they are very good to know where the trend is going to be. If you see my video on my YouTube channel, the very first video I made and released on February 28th, it forewarns you after this doji that market doesn't look good. Market should be falling. Okay, the next example is SPIX monthlies in August 2021. This is August 2021. Price here is closing 4522.69. 4522.69. Here we see C is close of the price 4522.69. This price is 4605.39. It is higher. Let us see what behavior the RSI is doing. RSI is lower. Between this and this, RSI is lower. So we saw this dip, and also we saw this small dip. But also between this high and this high, also between this high and this high, we see that the RSI level is waning. RSI is coming down. So basically, it means it is not healthy for the market for prices to be going up and RSI to be coming down from an overbought level, from levels above 70. So what happened next we can see is RSIs are coming down, and basically the market also came down. So let's see an example on SPIX weeklies. It's Jan 21 2025. This is one price. The close is 6101.25, and this one is 6114.62. Very slightly up, but that's how divergences are. And let's see the RSI. This is not as overbought a level, but anyway, to ignore such an divergence and buy into the market would be fraught with danger. So we in the market after that, as we know, collapse. So this was an early warning that you should uh, consider exiting your longs in the market rather than piling on fresh longs. Although price is going up and price is telling you to buy, but the RSI is telling you to exit. We can see it on some other index also. Russell 2000, we have it here. Between Monday 04 November 24 week, on this one the closing is 2399.64, and on this one the closing is 2434. Very little bit of difference, but let's see what their RSI show us. Again, it's not above 70, but anyway, it would be caution for you to be buying at this RSI level. Divergence, at this divergence. We can see it on dailies also, but the principle is the same. Let's see gold again, and let's see dailies in gold recent fall. Uh, This is so. This is on Monday, 30 March 31, 2025, and this is March 31 and April 02, 2025. So the two peaks are very close to each other, but the second peak is, we can make out the second peak is slightly lower. Second peak is slightly lower, and therefore it is a divergence and on a overbought level. So it is warning us that the price could fall. Price fell for three days. Fourth day was same day, and again after that the prices did go up. So it's a daily, so the potency is less. So that's why the prices didn't fall so much, because and also we have got a good other things are also there. We've got to focus on them also, that we have got a good daily trend underneath it, and the also the potency is not as big as a monthly or uh, weekly potency. Then we can see gold February 10, 2025. Between this and between this, prices are going up slowly, but the RSI indicator is suggesting something else. It's suggesting we have a divergence here. We have this is also a divergence. Not only that peaks have to be close to each other simultaneously, but this is a slightly longish divergence, and also it is warning you that the trend is changing. This is also and what happened next was that gold went sideways on the dailies for a while. It fell down for a while and it went sideways for a while before it again broke through with a Bollinger Band break, and after that it went up for few fair number of days. Another note on Bollinger Band break is that it should happen when the Bollinger Bands are close together, constricted. That's that's what's called a period of low volatility. That means prices have been not are in a tight range and they're not moving uh, very up and down or very far apart. This region is not a low volatility region. This is a higher volatility region. This in this region prices have been close to each other and therefore the Bollinger Bands have constricted. And this is what is called a Bollinger Band. This is what is called a Bollinger Band constriction. So when a Bollinger Band breaks happens after a constriction, that is what we are looking for. Not this break. Not this break. This is on a channel. This Bollinger Band is called a channel, and this is happening in. This is not happening on a constriction. Here again we had a constriction, and it was a slight break, but this was a decent break, and the prices did go up. Now let us see some bullish divergence. Till now we've seen some RSI levels overbought and bearish divergences. Let's see some bullish divergences. So let's see NDX dailies. Let us see this price level. March 10, or we need to see the lowest low, because this will appear as a low when you are on this date. You won't be seeing this chart. You won't be seeing this chart, the whole of this chart. You will only be seeing this. You'll only be seeing. You'll be seeing it like this. You won't know what's going to happen tomorrow. But what you do know is that this is a lower low, and this was a low that was there before it. So let us see what. So if you put a vertical line here, in this case, the reverse of above is happening. There, the next peak used to be lower than the previous peak. Here, the next trough or bottom is above the previous one. Here, so this is telling you the next day you can expect a buying in the market. So what this mean? This does not mean to buy in the market. Go out and buy in the market. This just means to exit shorts. If you are shorting the market, then it's a signal for you to exit the market. And this you can do it just in the last half an hour or 15 minutes of the market, when you are sure that the market is going to sure means as sure as you can be that the market is going to finish like this only. So this trough is higher than this trough. This bottom is higher than this bottom. So that is a bullish divergence. This bottom. And what we saw, what happened after that is market did go up, and market did go up three here, after which it faced resistance at the 200-day moving average, and it fell after that. And also this was a day of okay, so that's it. So let's see Apple dailies between March 7, 2024. Yeah, so here we see that we have a bottom here in price before prices went up, and here we see another bottom here in price before prices went up. So between these two, we can draw a trend line in the bottoms like this. This black line indicates that prices are going down basically in this manner. However, here we see that both in the RSI and the PPO oscillator, the indicator is going up. Indicator has been going up. So this is a long divergence, or this is a longer term, longer day divergence, longer term, longer day, whatever you might call it. It's also called a divergence. There's not much difference. It's not an immediate divergence between 1 or 2 days or 1 or 2 weeks or 1 or 2 months, but it's also the same principle applies. And on the PPO oscillator also, or the MACD oscillator, this same uh, it's rising up between this and this point. So it is telling you that there is a divergence between price and oscillators, and therefore the price should be turning up soon. And price did turn up after a while. And so this is divergence. Let's see another example between Nvidia, September 6, 2022. Again, we have a low here. 1 second. Just give me a second.
Bugün nasıl bir inşallah saraydan eksik ötüyor yemeği. Ayağımı yapıyor. Yemeğe daha çok.
मान लिया। अच्छा आगे मिल गई।
Hepsini uसी करते हैं
चलो ठीक है। Just give me a second. Something I have to talk to my mom. ठीक है। मैं नहीं जाना चाहता यार। नहीं है। Just give me a second, please. बाद में बात करते हैं। आधे घंटे बाद बात करते हैं। Okay, so here also we see that between this and this, or this low even, the market here was falling, and the indicator here on a low oversold, it's called. There it used to be called overbought. Here it's used to be called here it's called oversold. So the here the PPO has cut is happening here. It's not exactly from the start of the fall started here. So the indicator RSI started moving up earlier than the PPO, and it is indicating that the, there is a divergence in between price falling down and RSI moving up, and RSI moving up. So there can be a change of trend, and that's what happened. For a while, the prices moved up. They fell again, moved up again. So it's an early warning sign that don't be shorting it and think of trend changing. Trend actually we would be looking forward to go get in when the blues have crossed through the reds. It doesn't work out all the time, but that's what the principle says to think about getting it. Let's see one more example on Nvidia weeklies. 2018. Yes, this one. So this is one low, and this is the next low. So on this, when the week is finishing on this low, on Friday close, near the Friday close, you won't be seeing all these white ones. They will happen later. So the market will appear to you like this. So question now to you is, what do you do? Do you short the market, or do you get out of the market, or do you long the market? So this, let's see what the RSI is saying, telling us. In this case, the PPO is not telling us much. It's still separated. There's no PPO cut. Let's see if there is a signal in the RSI. There is a signal. This bottom is lower than this bottom. That means price has fallen down, but the RSI has gone up. So it means that you can expect an uptick in the next week. That's what happened. We got a white candle and prices started going up. So it would have been best for you to exit your shorts and wait for another good signal before you went long. Depending on how much you want to play long. I mean, what's your frequency of trading? Are you trading or are you investing? So for investing, you need to have a better situation. This is a situation for investing, not that situation. Not this sideways small moves. Not this for investing. You need to have situation like this where the reds have crossed over, blues are crossing over. This fell. So it happens when you cannot help it. Blues have crossed over, and um, you get a good time to invest and make some gains. Month Netflix also around the same time showed the similar pattern. Yes, this one. So I think there must have been something in the market for which Netflix and also reacted in the same way, and Nvidia also reacted in the same way. So these are our two black candles in question on case, and here also we see Netflix that the next trough or bottom is higher than the previous bottom. It's not again coming. It's not again coming below the 30 level, which is the oversold level. But again, we see that we cannot ignore a signal like this at a level lower than at a oversold, near oversold level. And what happened next was that Netflix went up. So you should not have been shorting it based on the previous history of Netflix that it's coming down, it's falling. So let's short it. That's not the way. And so this is divergences. And give me a second. Next, what we have is PPO cut. PPO cut or MACD cut. I call it PPO because it's called percent price oscillator. MACD is a oscillator formed by the difference of a 12 period exponential moving average and a 26 period exponential moving average, and that difference and a moving average of this difference plotted as a signal line. And when an NACD cuts the signal line, that is your exit signal from above and buying signal from below. Percent price oscillator in this case uh, doesn't use the absolute difference. It uses a percentage difference. So it's 12 minus 26 divided by 26, whether it's 3% or 5% or 2.5% or 6%, doesn't go more than that. MACD can swing very high. MACD, that's why I prefer the PPO. So I call it a PPO cut. So cutting down bearish, let's have some bearish examples. NDX, February 21, 2025. Or February 18, 2025. So we see that first, on the very top of the Nasdaq, it the PPO cut gave us a signal to get out. Actually, it has given us a signal earlier. Sorry. Yeah, okay. So 6 Jan 2025. So 6 Jan 2025, PPO cut was telling us that something is wrong in the market, get out of the market. So it was there for 4 5 more days. The market went up, but after that the market fell down. The PPO in the meantime was continuing to go down, but this was showing that the averages are coming together. And when the PPO crosses the zero line, that means the 12 period moving average has cut this 26 period moving average. There are whipsaws in this uh, indicator, but those whipsaws get reduced when your time periodicity goes up. In daily chart, there are more whipsaws. In an hourly chart, there are even more whipsaws. And but anyway, you got to keep an eye open. So, what is the signal coming? For let's see SPIX dailies also. SPIX, our signal came here. It was fairly timely. It came early, much earlier than this. We've been looking at the weekly. Sorry, but anyway, so it illustrates the principle well. So this is the weekly chart. So on 16 December 2024, we got a signal in our PPO which cut from this green line, cut the orange line, and we got a signal that something is unhealthy in the market, time to get out. Or people who want to get out, they can get out. Market for a few more weeks went up and down, and after that, lost it completely. Let's see Google weeklies. This is a weekly chart, and I have two examples here. One is this one. This cut here on 18th February 2025 for Google, and this came after this huge fall, but nevertheless, it did tell you that something more down, more pain is coming in Google, and that's what happened. It fell a lot. Similarly, it had also given a signal in July 2024. In July 2024, 15 July 2024, week of 15 July, Monday. Here also again it fell, and there was some more negativity coming in Google, which got absorbed by the weekly guppies. You can expect some absorption when uh, prices falling into the guppies. Then let's see Meta weeklies. So it's not necessary that prices will fall a lot. Here the trend went from upwards to sideways. So basically, it signaled that there was a large uptrend in Meta, but then it kind of hit this roadblock and went sideways for a number of weeks here. And this was shown in the PPO here, PPO bearish PPO cut. Um, I I I don't remember what I was showing you, bearish VPOs or bullish VPOs. But anyway, it's kind of got mixed up. But anyway, so we've seen Google. Yeah, I was showing you bearish PPOs only. So this is Google, and let's see Google monthlies. Jan 2021, or this one, not Jan 2022. So on ar- around this time in Feb or Jan 2022, Monday Jan 2022, we got a PPO cut, and which meant was get out of the market. Market is expecting to. This was the PPO cut, and it meant that the trend is about to change. It doesn't say it's going to fall, but it's going to change. And actually, if there has been such a strong trend, then there is a big probability that the trend which is going to change will be downwards. It won't be upwards because people are going to take profits of people and institutions and everybody. Now they will be on the selling side. We can see gold also another example. Bearish PPO cuts. This is an example of when gold from an uptrend went sideways, and we got inkling of this on this PPO cut, which told us to that gold is not looking to go up anymore. Let's see some bullish up PPO cuts now. SPIX dailies August 13, 2024. Okay, so we are going to speak about bullish PPO cuts. So this is one cut which is happening here. When the green line cuts the orange line from below, when the green line cuts the orange line from below, like this, that means prices are going to go up or wanting to go up. And in this case, they didn't go up so much because again the signal is on dailies. Is not so potent as on a signal on a monthly or a weekly. But prices did go up basically after a while. This they went up from here to here, then a correction, and then a move up again. Google weeklies. Let us see Google and on weeklies. I've changed the time frame. Higher signals are more higher time frames are more potent. Jan 9 2023, somewhere around here. Okay. So this signal is this is a signal which we got after S&P started to here. Here also we see a in the green line we see a divergence. Uh, it's the lower bottom is higher. Actually, it's not a divergence. The price is also higher. So anyway, so we get a after the price has been falling for so many weeks, we get a signal here that it might want to start going up again. There is this whipsaw signals here also, but then again it's a function of time frame. So or not all signals produce, but you want to be alert and you want to be not shorting or not be want to get caught on the wrong side. Let's see Meta weeklies. We got a signal here. We got a signal here that green line is crossing through the orange line, and this is a bullish PPO cut. And price after that went quite okay, very okay. Gold monthlies. Let us see some monthly action in gold. March 2023 sideways to uptrend. So in this March, Wednesday 01 March 2023, the the movement has changed from sideways since August 20 to 2023. That's about 3 years to an uptrend movement. The PPO has cut from below and is signaling that the momentum. These are momentum indicators, RSI and PPO, and the Guppy also. Guppy indicates if there is a trend, then the momentum is strong. Sideways to uptrend. And again in 2019, gold will give us another signal. Gold gives a similar signal. Yes, this one. and this is a cut here from above that zero level, and that's fine. We'll take the cut. And this is a bullish cut, so we are expecting the price to go up from sideways to uptrend. Gold was sideways for a while here, and after that, after this cut, it had a small correction for three months actually, and then with this Bollinger Band break, white white one, it has gone up. It went up. So this was mostly about the indicators and uh, indicators, etc. Let me now speak a little bit on long-term versus short-term investing. We want to invest or trade or do anything in the market our re- when what our view is like this. Reds are below, blues are above, and prices. So this is what we are looking for in any time frame. Uh, this is a monthly time frame. That means the monthly trends are very strongly bullish. People are not bearish. In 2008, the monthly trend itself was in question. Blues are also below the monthly. Monthly for a long time between 2000 March or blues started crossing over in May 2008. In May 2008, blues started crossing through the reds, and quite until Jan 12, the whole it wasn't really good for confident buying. Prices did go up, but I don't remember. Maybe the Fed acted or something. But anyway, so this comes in all time frames, and this will come in weekly also. This comes in weekly also. So for you to long term investing versus short term trading you generally trade on a shorter time frame, either on a daily or even shorter dailies also. You get the same. This is what the fractal nature of the market is. You get the same pattern in all time frames or similar price, but just placed differently. So you want to trade dailies, you would open a daily chart and then see the price movements on that, see RSIs or PPOs on that, and your time span would be smaller. And long term investing requires that you are, depending on how long your horizon is, it's mostly done with on monthlies. And sometimes the monthlies also take a long time to correct themselves in this case. But the secular trend in US equities is positive only since the past mm, 2012, basically. So it's been 13 years for the trend to be positive. Technical analysis is not an independent discipline for long term investing. It should be married with fundamental analysis also. That means that there are a lot of politics and macroeconomic stuff happening. So, all that is also to be taken into account when investing for the long term. For the short term, also these things matter, not the macroeconomics and all, but politics. Like Trump gave a decision that he'll be on Liberation Day, April 2, he'll be imposing tariffs. That was a political development. And similarly, last week, on last Wednesday 9, April 2025, he said he would exempt some tariffs. So these are political effects on the market. And if you get caught on the wrong side, the you cannot firstly foresee such events. And what you can foresee, however, is again I'll repeat it here. You can see it on my channel. Here we had 3 weeks of 3 months. Sorry, not weeks. 1, 2, and 3 of price was not breaking above this 6040 level, 6039.963040 level. It was facing resistance here. Then we got a doji. A doji means basically that prices is indecisive. Market doesn't know which side to go, up or down. And so this was a time to exit the market. And let's see what are indicators. We got a PPO cut after the next month in March. And RSI was also giving us, yes, RSI was also giving us divergence. I think we discussed this. Here we in March we got RSI has already told us to exit the market. So technical analysis just tell you these kind of things, that where you're placed, how you're placed, what you should be doing, what you should not be doing. But it cannot tell you macroeconomic policies, effects of them, political decisions, etc. Okay, so let me just quickly go through what we have not discussed, and what we have discussed you can see it in this PDF which I have sent you. What we have not discussed and a little bit on those. Firstly, I'll tell you there are a lot of books on the subject. These are one of the few favorite books of mine. This technical analysis of stock trends by Edwards and Maggie. It was written in the 1950s by Edwards and Maggie. Edwards was an MIT scholar, an engineer from MIT. Japanese candlestick charting was written by Steve Nissen in the 1990s, and he brought Japanese had been using these candlesticks ever since the 17th century with them for rice trading and those kind of things. So they had developed all these techniques. So he went over to the Japanese, and through their libraries and their researchers, he got these techniques for the West. Martin Pring is a very renowned market technician. I think he's in US only. So he has written many books, and this is the recent book, Momentum Explained by him. It's in 2 volumes. And point number 23 is this above discussion is by no means exhaustive. The sample of what we've not covered is chart patterns. There are many chart patterns. So there are triangle, and all of them mean something or the other. Triangle, symmetrical, ascending, descending, rectangles, head and shoulder. To cover all these things would have been too much for me, and so you'll have to read books only for them. They are. You'll find these chart patterns by Edwards and Maggie book: accumulation, distribution, breakout, necklines, gaps, reverse divergences, and all you'll find by Martin Pring. Many other indicators, oscillators, also by Martin Pring. Candlestick analysis and pattern analysis by Steve Nissen. Elite wave theory, I don't do much, but it's a theory which some people subscribe to, and for that you'll have to. Glenn Neely is an author. Robert Prechter is another author. So, so that's all for the time being. I hope you enjoyed the video, and I hope uh, you will gain something out of it. And I'm sorry, the first video got broken at 17 minutes only. There was some issue with me, and there was some issue. So I'll be sending you 2 videos instead of 1 video. So watch them both, and let's hope we make some good knowledge gains. Thank you so much. This has become quite long, 1 hour 50 minutes. I thought it will be a minute, 1 hour only. But anyway, take your time to see it. Thank you.